There is one thing a lot of unprofitable traders actually struggle with, and that is multi-time frame analysis. They struggle with finding out where the market wants to go to next by jumping through the different time frames all the way from the daily to the 1 minute. And today I'm going to show you exactly on a plain chart how I jump on the market and see where the market wants to actually go to next by jumping through all the different time frames and marking out my zones, marking out my next targets, marking out liquidity points. So let's get right into it. So let's zoom in on the daily time frame so we can see where the market is going to overall. And the first thing that I like to start doing is figuring out the market structure on the daily time frame, figuring out where the highs and lows are and what trend are we basically in. Right now, the first thing that I want to do is just grab my little path tool and I'm going to show you how I mark it out. So let's start off with this low right here, as this is quite a while ago. So we have a clear low leading to a high. Then from this high, the next kind of low that I can see that's a structural low is this low right here. Again, this low is respecting the previous low. Then from this low, we're creating a new high again over here. Again, the most recent low from this high is this low right here, which would be your structural low. And again, you have the same thing right here, another high being created. So overall, you can see that in this trend, we are heading bullish. So we're in a bullish price action phase right now. So what we can see by that is that we keep breaking to the upside. Every single time we just keep breaking to the upside and we're respecting the lows. So overall, we're not breaking past all these lows right here. So this low is getting respected, this low is getting respected, this low is getting respected, which is leading to us breaking higher in price. So now we've identified this. The one thing that I like to do from now is I like to identify the main push, the most recent main push. The most recent one that I'm seeing at the moment is this main push right here. Because if you look at some internal structure on the daily time frame and you just kind of zoom in a little bit, instead of looking at the overall structure, you look a little bit at the more internal moves, the little smaller moves, because it can actually tell you a story, especially on the daily time frame. It's okay to look at those smaller moves because on the 4 hour and 1 hour, that's proper structure. So by looking at this, what can I see? Similar thing as before, we're creating lows and highs, but the highs keep breaking to the upside while the lows are respected. And what can we see from that is that we keep breaking higher like this, and our most recent main push is actually from this low to this high. So the main push that I like to call it is the most recent push to the upside or the downside, depending which trend you're in. So it's going with the trend, loads of volume, and it's kind of the one push that didn't have a retracement in it. It's going with the trend, so it's always pro trend. And in this case, it's going to be this move right here, this very last move from this low to this high. Now, we figured out our main push. The one thing I like to do straight away is mark our zones out. And in this main push, what are the zones that we're going to mark out? The main two zones that I always mark out is the decisional and extreme area. The decisional zone right before the break of structure. The extreme is the origination point of the main push. So if we look at this right now and mark out some zones, the first zone I'm seeing is at this low right here. We have this demand area, which is the extreme. So let's mark that as the extreme zone right here. We have the extreme. And then what is the zone right before the break of structure on the daily? In this case, is going to be this low right here. That's going to become that decisional zone. So now we found our decisional and extreme area. Where do we go to next? This is where we now jump into the lower time frame, or the next lower time frame from the daily, which is the 4 hour. So after I jump on the 4 hour, we have now found our decisional. We found our extreme now. We know that overall the market is in a bullish push. Now we're going to figure out where it wants to go to next so we can actually figure out what our next target is. The first areas that I'm seeing that I know price is going to most likely target before continuing to the upside is the decisional area and the extreme area. So what I like to do on the 4 hour now is mark out the most recent zones and figure out the structure on the 4 hour. So now that we zoomed into the 4 hour, the first thing that I like to see is what is the structure like. So clearly from this high, we are looking a little bit bearish now. And you might be thinking, oh, now you have the daily that's bullish and now you have the 4 hour that's bearish. Which one do we follow? And that's where we're going to get further into the other time frames. That's going to give us a better narrative of what are we currently, bullish or bearish in this moment right now, not overall in the next month, in the next year. So right now we're in a bearish momentum. As you can see, we're creating highs and lows, but clearly the lows are not being respected while the highs are. So in this case, you can see that we're creating lows, heading high, then continue breaking lower. So clearly price is going to continue further down, at least to one of these zones. So that's my first idea right now, is that price now is heading lower. We had that break to the upside. The next thing that it needs to do is have a complex pullback or a retracement, you can call it. So now we're in that retracement phase where price is going to slowly start coming down towards these decisional areas before then giving a reaction and making that next main push. So we might be overall bullish on the daily, but on the lower time frames, it does look like we're bearish, heading towards these decisionals. This doesn't mean that we have to now wait for price to hit these decisionals before we can start trading. We can actually just trade towards the decisionals instead of waiting for price to come into here, and it might take weeks, it might take days, it might take hours, you never know. So instead of waiting for price to build up and come down to these decisional or extreme areas and then trade from it, we can just trade towards it. So the first thing that I want to do now is jump on the 1 hour and mark our relevant highs, relevant lows, mark our relevant zones are actually correct. So in this case, we're going to do the exact same thing that we just did on the daily, because all time frames are fractal. Every time frame acts the same. All principles are the same on every time frame. Every single concept you can use on every single time frame. So that means that we're going to do the exact same thing. Right now, let's figure out the structure. Let's start from up here. So we have a low that was created from this high. Then we had a high, low, and then right now is the most recent high right here. So what does that tell us? First of all, we've not created our next main push yet on the lower time frame, like the 1 hour, because right now we're sitting within that retracement. We can clearly identify that we're heading lower, but the main thing is that we've still not created that next main push, which is actually good. This is in our favor. So now we can actually start using this to identify when the next main push is going to happen. So we need to figure out the most recent main push, which is from this high to this low right here, as we identified before. Now we need to mark out the zones within this main push. Right now I'm seeing this is your extreme area right here, because price broke right here. And at this moment, we don't have a decisional. This can sometimes happen that you only have the extreme and you don't have the decisional. So in this case, we only have an extreme area. Now, what can we actually do? We know that now we're within that complex pullback, maybe heading towards the extreme before making that next main push. So you might be thinking, okay, so you just said we're bullish on the daily, we're bearish on the 4 hour, we're technically bearish on the 1 hour, but then we're within the complex pullback, the retracement. So technically we're bullish again. This is why you need to use all different time frames to figure out where you need to go to right now, because overall, it might look like you're bearish, but price is going to head up a little bit higher, most likely, towards these areas, then sell off. So right now, the first things I'm seeing is that price has still not reached these supply areas. So let me mark that out as your extreme supply. Price has still not reached these supply areas. So what can we do? We can start looking for continuation trades towards these supply areas to actually then catch a reversal from here. So the first thing that I want to do is mark out liquidity levels. First thing I'm seeing is this high right here. We'll mark that out as a medium inducement, because on the 1 hour, I like to mark out these highs as medium inducements. And you want to see where the next targets are going to be. So this low would technically be your next target for that main push. When price now comes up, induces into the zone, then wants to sell off, this is going to be your next external low that is going to break, is going to cause that next break of structure. So when now price wants to actually head higher into these areas, and we get to this area and you're looking for a trade now, the next point of reversal is most likely going to be here. So we're going to be targeting for price to aim for these lows and actually just take our trade out at these lows, just in case price now comes down here and then reverses again to the upside, because that's our next point of reversal, because that's our next break of structure point, next structural point in general. So now we're starting to identify where we're going to be heading. So On the 1 hour, we've identified that most likely we're going to be heading towards the extreme area. We're going to use the 1 hour to identify our highs and lows that we can use as inducements to give us some more fuel in the market to head in the direction that we want to. And then we can jump on the 15-minute to actually look for trades. So if we're going to actually trade from these areas, what we want to do is wait for something that I marked out as our key time windows. So we have 1 hour in London session, 1 hour in New York session. So we have this 1 hour in London session. So tomorrow, if I'm going to take this trade, I want to wait for price to be building up. And in our London session, induce coming into the extreme area to then sell off. Or I can wait for price to maybe say, this is a smart money trap right here. You're going to tap into the smart money trap, induce low. We're going to induce to the downside right here. We're going to induce these lows. And then we're going to be heading to the upside, looking for buys towards that extreme. So this is why it's important to understand where you're in the market right now and where price is going to go to, because you can use your different models to trade different ways. So we're either going to get my reversal model, which is going to be inducing into a demand or supply area. And in this case, is going to be a supply area to then sell off from here. Or I'm going to be using my continuation model, which is my smart money trap model, where we have a fake supply zone, tapping into it, giving a false reaction, which is actually just inducing more liquidity lower to then give me entry confirmations to then buy to the upside. So this is how I'm going to be using all the different time frames to give me the right analysis to know where price is going to go to next. Because if you just looked at the daily right now, you might be thinking that, okay, we're bullish, we're just going to keep buying. But on the lower time frame, as you can see on the 4 hour, we're clearly bearish. We're heading towards these decisionals. So you're going to say, oh, I can't buy because I need to wait for price to come into these decisionals. Okay, so you can't buy. Then you jump on the 1 hour. You see that on the 1 hour, price still hasn't reached the extreme areas or an area of reversal where price can actually reverse from and make that next main push. So you can't even sell off yet towards these higher time frame decisionals until this extreme is filled. That's why it's important to know your lower time frame as well as you know your daily, weekly, monthly time frame, because you need to know where you're trading right now, today, not where you're trading next week. So this is how you're going to be using multiple time frames to figure out your next target, your points of interest, your demand and supply zones, and how to actually trade from them. So hopefully this actually helped you guys out, and you have a better idea of how to actually map out your bias of your day and how to use multi-time frame analysis to your advantage.